Technology changes the way people live and do business, but the origins of its components and materials are just as important. Modern societies, economies, and even weapons rely on critical minerals to function. Africa happens to be home to 30% of the world's known critical minerals, and America wants to tap into that marketplace. The problem, however, is the Chinese beat everyone to the punch. For over a decade, Beijing has been signing deals left and right and building the infrastructure necessary to extract those mineral riches. Today, it dominates the global extraction, refining, and processing of mineral resources. China is miles ahead of the competition. Nevertheless, need inspires creativity, and the Americans have drafted a comeback strategy to recapture a stake in Africa's minerals market. It has pledged hundreds of millions of dollars to revive a mega railway that runs from the Atlantic straight into the heart of Africa, a passage known as the Lobito corridor. The area through which the corridor goes is rich in copper, gold, and cobalt, but also conflict, disease, and turmoil, not exactly a stable environment to set up shop. China is making waves too. It is negotiating to take over the operations of the Taraza Railway, which runs in the opposite direction from Africa to Asia Pacific and would thus ship the same critical minerals to China. Both America and China need to do things differently here. They cannot act unilaterally as they do elsewhere. If treated recklessly, either one of the corridors could be the last stop before a train wreck. America is waking up from its slumber. It is calling China out on its hold over Africa. The source of the friction stems from the critical mineral resources buried underground. Everything from F-35 jets to EV batteries and wind turbines relies on these critical resources. These minerals include rare earths, bauxite, chromium, lithium, manganese, platinum, and so on. Stuff of which Africa has more than plenty. The southern half of the continent is affluent in the resources that shape modern life. Running from the Democratic Republic of Congo to South Africa is a dense concentration of mining sites known as the Mineral Belt. It's not just the density that matters, but the high-grade quality and the infrastructure that carries the resources to the open oceans for exporting. However, the jungle fills the landscape, so much so that road and rail infrastructure is scarce. Even when mining sites are connected and primed for export, they are rarely ever connected to the federal capital. For instance, between the DRC capital Kinshasa and the resource-rich Katanga region sits nearly 1,600 kilometers of rainforest. This terrain is largely impassable, and the two sides of the country have little communication in between. Not surprisingly, local power brokers are detached from the federal government and often do their own thing. It just so happens that America is now looking to do business in the very same Katanga region. This part of the DRC has the world's largest supply of cobalt, estimated to be around 70 to 80% of global production. Meanwhile, neighboring Zambia is a major source of copper. It possesses 6% of known copper reserves globally, but more importantly, it has the highest grade deposits on record. As such, the DRC and Zambia sit at the epicenter of the scramble for critical minerals. To tap into the Congolese and Zambian resources, President Biden has pledged $360 million toward reviving the Lobito corridor. This follows an earlier pledge by a consortium of private investors to invest more than $450 million into the associated infrastructure project. What's more, roughly at the same time, in November 2023, the African Development Bank jumped on the bandwagon as well. helping to raise $1.6 billion in financing while contributing about $500 million itself. Altogether, that is a fortune in investments. The stretch of railway would count more than 1,300 kilometers from end to end. Originally, the railway was built by Belgium and Portugal in 1905, but a portion of the link was destroyed during Angola's civil war and fell into disuse. Now America aims to restore and renovate the railway, particularly the part going from Ndola and Chingola to the border crossing of Jimbe. Doing so would allow American multinationals to move critical minerals to the port of Lobito in Angola and from there ship to the Atlantic Ocean. The International Energy Agency estimates that between 2020 and 2040, demand for nickel and cobalt will increase by 20 times, for graphite 25 times, and for lithium more than 40 times. So the idea is for the Lobito corridor to help drive the increased volumes of traffic onto the railway line. But the plan is bigger than just a railway. To fully exploit the mineral belt and do so cost effectively, production needs to increase. In effect, America wants to upgrade the railway into a value chain that will not only export critical minerals, but also foster business development and commercial activities. To stress the point further, the World Bank committed $300 million on its own to fund an economic diversification plan for Angola. This project, approved in May 2023, will directly contribute to making the Lobito corridor into a value chain. In the early phase, the chain could host refining and processing plants, but as people move in and out, and as commercial activity increases, new towns would emerge, and the chain would take on a life of its own. It could take decades to develop, but that's how urban life evolves. By turning the Lobito corridor into the Lobito value chain, Biden hopes to strengthen ties with African nations at a time when foreign direct investment in China is at its lowest in decades. For America, this is a window of opportunity to knock China off its African throne. As part of its charm offensive, Vice President Harris visited no less than 3 African nations in 2023. Whether it will do any good is unknown. Both Washington and Beijing are eyeing the same periphery, looking for ways to secure new corridors for strategic raw materials. China has a head start. It is Africa's largest trading partner and has been for 15 consecutive years. Amid the American effort to revive the Lobito corridor and drive exports to the Atlantic, the Chinese are not exactly sitting on their hands. In Tanzania and Zambia, China is negotiating to take over the operations of the Tanzania-Zambia Railway Authority, or TAZARA for short. This railway runs from central Zambia to the port of Dar es Salaam in Tanzania, anchored by the Indian Ocean. It was initially financed and built by China itself in 1975, when it didn't have the revenue stream it does today. But even back then, Chinese lawmakers recognized the importance of critical minerals. The Tazara Railway is roughly the same length as the Lobito line, and, like its westbound twin, the Tazara line has also fallen into disarray and decay in recent times. And just as America is looking to revive the Lobito line, China wants to do the same with the Tazara line. Beijing has been negotiating the acquisition of the railway for years. Most recently, in February 2024, it offered $1 billion to refurbish the infrastructure and take over its operations. Down the line, China may even consider linking the Tazara line to Lubumbashi, the capital of cobalt-rich Katanga. Doing so would bring Congolese cobalt to Asia Pacific and secure China's approach to disruptive technologies at the same time. Admittedly, $1 billion may not seem a lot when compared to previous Chinese investments in Africa. However, China is currently going through an economic slump, and since 2023, it has moved away from massive infrastructure projects in Africa. Beijing has changed. It is more cautious when spending, and it no longer does billion-dollar ventures. No new mega projects have been announced since. So, China's decision to invest $1 billion in the Tazara Railway provides an interesting context. It implies a long-term geo-economic blueprint. Looking ahead to the next decade, China may even take a page from the American playbook and turn the Tazara Railway into a value chain in its own right. The geopolitics of the region is quite literally a choice between West and East. Considering the facts on the ground, the African nations through which the corridors pass may prefer to leverage American interests against those of the Chinese and vice versa. Though Beijing offers better terms and improved capacity, Angola, Zambia, Tanzania, and the Democratic Republic of Congo can hedge their positions to get the best deals possible. China's bargaining power is more compelling due to the Memorandum of Understanding it signed with most African nations a decade ago. Since then, China has rolled out on the continent through the Belt and Road Initiative. Accounting for the past 2 decades, Chinese state-owned companies have invested roughly $170 billion in massive infrastructure projects throughout the continent. These include ports, airports, railways, highways, telecommunication networks, etc. These investments have allowed Chinese firms to develop regional partnerships with the purpose of extracting critical minerals and shipping them to China. And while Beijing may no longer be doing billion-dollar projects in Africa, its past investments still carry weight. Furthermore, neither the Americans nor the Europeans are leaders in EV technology. Almost 90% of cell component manufacturing takes place in Asia, with China having impressive EV capabilities. In fact, the largest Chinese EV manufacturer, BYD, has surpassed Tesla in terms of EV production according to the fourth quarter of the fiscal year 2023. For Africans, Beijing offers better business terms, but they may yet welcome American investors to reduce their exposure to China. Relations between Angola and the West have steadily grown since it joined the World Trade Organization in 1996. The country has vast hydrocarbon deposits and sits between the central and southern parts of Africa. More importantly, Angola is unique among sub-Saharan nations in having a navigable river on which goods can pass into the heartland. So, Angola is not looking to wed itself to China, it may prefer to have its options open. The same principle applies to Zambia. It has the highest grade copper deposits on the planet, and both the Lobito and the Tazara rail lines originate from its territory. If Zambia can maintain a balance between the east and westbound corridors, it will eventually cultivate stronger ties with both America and China. There would be no need to alienate one of the two largest economies over the other. Meanwhile, for the Democratic Republic of Congo, the stakes are different. The country has been a failed state since 2006 with no fix in sight. A dozen insurgencies are rampant in its remote provinces, and a widespread proxy conflict is ongoing with its neighbors. America is barely involved, and when it does, it focuses on stabilizing the country and providing humanitarian aid. Trade between the DRC and the US stands at a meager $332 million. Compared to America, China has an edge in risk tolerance. It has deep-running business ties in the DRC and holds more sway over the country. Ergo, the DRC will likely stay close to China's side in the foreseeable future. Bearing all in mind, the Africans may still want to exercise caution. Sitting on the fence for too long may result in splinters. Today, the mines in the mineral belt sit at the epicenter of the scramble for critical minerals. These resources underpin the operations of modern societies, economies, and weapons. But that scramble for mines and resources could just as easily turn into a scramble for territory and eventually a scramble for nations. It's a story Africa has seen before, and it didn't end well. If the mines in the mineral belt could talk, they would scream with rage. Alright, now that we've wrapped up the video, I want to tell you about today's sponsor, Westhaven Gold Corporation. They are a junior mining and exploration company focusing on gold. You can see their ticker symbol on the screen. Just for a quick recap, one of the reasons I keep an eye on companies like Westhaven is because much of what's happening in the world right now, be it Chinese and Americans vying for dominance in Africa or elsewhere, much of it revolves around natural resources. Gold is a fascinating resource because it is a timeless storage for value. It maintains value over time, making it a safe bet in times of inflation or economic instability. Westhaven is one of the companies that actually pulls the gold from the ground. And with demand for gold off the chart, breaking $2,000 an ounce, they are definitely in the right business. Westhaven is based in Vancouver, Canada. They sit smack dab in the heart of a relatively new and underexplored gold belt in southwestern British Columbia, which is one of the friendliest mining jurisdictions in North America. Now, when examining mining companies, it's essential to understand a few things. Their land package is first and foremost. You have to understand the land package. That's the bread and butter of any mining and exploration company. Westhaven has 4 large properties across southwestern British Columbia. If you're not familiar with where that is, take a look at this. Here is a map of British Columbia. And right here, in yellow, is its gold belt. According to the Canadian government, the region holds about 280 million ounces of gold. That's a lot of wealth waiting to be dug up. This research paper is from the Ministry of Energy and Mines website, by the way. Westhaven sits in the center of the gold belt, just near the Fraser River. They purposely bought this land for its prospects. Back in 2018, Westhaven made a big discovery on its Shovel Nose property, which led to its stock price to soar to $1.35. That is what typically happens when a mining company announces positive drilling results. It doesn't always play out like that, but in general, prices go up when positive results are announced. And that's when you see these big gold companies swoop in and try to make an acquisition or make a significant investment. In 2022, Franco-Nevada Corporation did just that by entering a financing arrangement with Westhaven worth $10 million. For added context, Franco-Nevada is one of the leading gold-focused royalty and streaming companies in the world with a large and diverse portfolio. It is currently trading at a $23 billion market cap. So that is a huge investment from a credible and established company in the industry. If a major player saw some potential back then, there is so much more to look forward to now. Recently, Westhaven has received a 650 drill hole permit at its Shovel Nose property. The priority drill targets for 2024 have already been selected, and now it's just a waiting game. If Westhaven makes another big discovery, like they did in 2018, it could be a game changer. Again, mining is speculative, so it's essential to do your due diligence on a company. You can see what happened to their stock price after announcing positive results. It jumped up, going from 25 cents to $1.35. Prices steadily went down afterward, and that's what makes Westhaven particularly interesting because now it's back to where it was before the 2018 discovery. It's like buying Bitcoin in 2018 after its jump and drop, only for it to shoot to the moon a few years later. So this is definitely a research opportunity. Again, here is their ticker symbol on the screen. I will also leave a link to their website in the description. Westhaven is a public company, So all the information is available. Make sure to do your own due diligence. I'm just providing some of the information about the company and the history of the area. I've been your host Shirvan from Caspian Report. If you approve of what we do, please leave a comment, hit the like button, and mayhaps share the video. In any case, thank you for your time, and Sawal.